What if you could discover the 6 most explosive growth opportunities for December 2025? These aren't just random picks, they're industry titans, engines of innovation, and the backbone of tomorrow's market. We'll cover leaders in AI, semiconductors, social media, high-performance computing, e-commerce, and digital advertising. Smash that like button, share your top pick in the comments, and subscribe for more. Let's dive into the first company. NVIDIA, ticker symbol NVDA, is the undisputed king of AI. Once known for powering video games, their GPUs now drive the world's most advanced AI, from data centers to autonomous vehicles. Their CUDA software has created a powerful ecosystem, making it tough for competitors to catch up. NVIDIA isn't just a chip maker, they're the backbone of the AI revolution, and as AI grows, so does their dominance. While NVIDIA's data center and AI story grabs headlines, their growth goes far beyond that. Gaming remains a powerhouse, fueling a loyal upgrade cycle. Their GPUs drive industries from design to entertainment. And in automotive, NVIDIA is powering the future of self-driving cars. This multi-pronged approach cements NVIDIA as a leader across high-growth sectors. Now, let's talk about the numbers, because, honestly, a great story is nothing without the financials to back it up. And with NVIDIA, the numbers are simply staggering. We've seen revenue growth that would make most other large-cap companies blush, driven almost entirely by the insatiable demand for their data center products. Their earnings reports have consistently crushed analyst expectations, leading to a dramatic re-rating of the stock. This isn't just hype, it's tangible, record-breaking financial performance. The company is executing on its vision with ruthless efficiency, translating its technological leadership directly into incredible top and bottom line growth for shareholders. One of the most impressive aspects of NVIDIA's financial profile is its incredible profitability. The company commands extremely high gross margins on its products, a testament to its pricing power, and the premium that customers are willing to pay for its best-in-class technology. This allows them to generate massive amounts of free cash flow, which they can then reinvest into research and development to further widen their competitive lead, or return to shareholders through buybacks and dividends. This self-funding model, where incredible success fuels even more investment in future success, creates a powerful flywheel effect that is very difficult for competitors to disrupt. Of course, with such a rapid rise in stock price, valuation is a valid concern for any investor. NVIDIA is not a cheap stock by any traditional metric. It trades at a high multiple of its current earnings. NVIDIA stands at the center of the AI boom with a market value of roughly $4.31 trillion, producing earnings of about $4.04 per share and trading at a price-to-earnings ratio near 44.53. In 2024, the company reported $60.92 billion in revenue and converted that scale into $29.76 billion of net income, numbers that highlight how dominant margins and platform leadership can drive outsized profitability. However, you have to ask yourself, are you paying for where the company is today or where it's going to be in 5 or 10 years? The market is pricing in a tremendous amount of future growth, and the key question is whether NVIDIA can deliver on those lofty expectations. Given their dominant market position and the sheer size of the AI market opportunity, I believe the argument for continued growth is incredibly strong. Looking ahead to December 2025 and beyond, the runway for NVIDIA still looks incredibly long. The transition to accelerated computing and AI is still in its early innings. We're just beginning to see the productivity, gains, and new applications that this technology will unlock. As more and more of the world's data moves to the cloud and gets processed by AI models, the demand for NVIDIA's hardware and software will only continue to grow. While there will inevitably be volatility along the way, the long-term secular trend is firmly in their favor, making NVIDIA a cornerstone growth stock for any forward-looking portfolio. Our second pick is a company that you might not hear about every day, but its technology is absolutely essential to the functioning of our modern digital world. I'm talking about Broadcom, ticker symbol AVGO. While they don't have the same consumer-facing brand recognition as an NVIDIA or a Meta, Broadcom is an absolute powerhouse in the semiconductor and infrastructure software space. They are the ultimate picks and shovels company, providing the critical components that enable global connectivity. If NVIDIA is building the brains of AI, Broadcom is building the nervous system that connects everything together, and that makes them an indispensable player in the tech supply chain. Think about the complex journey your data takes every time you stream a video, join a video call, or access a cloud application. That data travels from a massive data center, through complex networking switches and routers, over fiber optic and wireless networks, and finally to your device. Broadcom designs and manufactures the high-performance chips that are critical at nearly every single step of that journey. They are a leader in networking chips, custom silicon for data centers, and components for smartphones and other wireless devices. Their technology is the invisible backbone that makes the internet and our connected lives possible, and their leadership in these markets is incredibly strong. What makes Broadcom's business model so compelling is its focus on mission-critical, best-in-class products. They don't try to be everything to everyone. Instead, they identify specific, highly technical market segments where they can be the number one or number two player. This strategy allows them to command significant pricing power and achieve industry-leading profit margins. Customers like Apple, Google, and major telecom providers rely on Broadcom for components that are absolutely essential to their product's performance. Switching to a competitor would be incredibly risky and costly, creating a very sticky customer base and a predictable stream of revenue. This focus on leadership in niche, high-margin markets is a core part of their DNA. The company has a long history of strategic acquisitions, buying best-in-class businesses and integrating them into their highly efficient operating model. This approach, led by their brilliant CEO 𝗗𝗚𝗧, has been a recipe for tremendous value creation for shareholders over the years. They are masters of capital allocation, using the massive cash flow generated by their semiconductor business to acquire great software companies, further diversifying their revenue and increasing their overall profitability. This makes Broadcom a unique hybrid of a hardware and software giant. While Broadcom's roots are firmly in semiconductor hardware, their strategic expansion into infrastructure software has transformed the company into an even more powerful and resilient enterprise. This isn't just a side business, it's a core pillar of their growth strategy. Through major acquisitions like CA Technologies and Symantec's enterprise security business, Broadcom has built a formidable portfolio of software solutions that are mission-critical for large corporations. This software helps businesses manage their complex IT infrastructure, from mainframes to cloud environments, and secure their networks from cyber threats, creating a powerful recurring revenue stream. This software segment provides a wonderful balance to the more cyclical nature of the semiconductor industry. While chip demand can ebb and flow with product cycles and macroeconomic conditions, enterprise software contracts are typically long-term and generate predictable, recurring revenue. This creates a stable financial foundation for the company, smoothing out earnings and providing a consistent source of cash flow. This hybrid model is a key differentiator for Broadcom and makes them a more resilient investment compared to pure-play semiconductor companies. It's a brilliant strategy that provides both growth and stability. More recently, the blockbuster acquisition of VMware has taken this software strategy to a whole new level. VMware is a leader in multi-cloud infrastructure software, allowing enterprises to manage their applications across their own data centers and public clouds like Amazon Web Services and Microsoft Azure. This acquisition puts Broadcom right at the heart of the hybrid cloud revolution, one of the most significant trends in enterprise IT. As companies increasingly adopt a mix of public and private cloud environments, the need for a unified platform to manage that complexity becomes paramount, and that's exactly what VMware provides. The synergy between Broadcom's hardware and software businesses is incredibly powerful. They can now offer customers a complete stack, from the underlying networking silicon all the way up to the virtualization software that runs their applications. This creates significant opportunities for cross-selling and bundling, deepening their relationships with the world's largest enterprises. By controlling more of the essential infrastructure stack, Broadcom builds an even wider competitive moat and solidifies its position as a strategic partner to its customers, rather than just a component supplier. This software transformation is a key reason why Broadcom's future looks so bright. When you peel back the layers and look at Broadcom's financials, you find a company that is an absolute cash-generating machine. Their relentless focus on operational efficiency and market leadership translates into some of the best profit margins in the entire technology sector. They run a lean operation, meticulously managing costs and extracting maximum value from every business unit and acquisition. This financial discipline is a hallmark of their management team and is the engine that drives their incredible shareholder returns. The numbers simply don't lie. This is a company that knows how to make money. Broadcom sits as a massive semiconductor and infrastructure player valued at approximately $1.82 trillion, with EPS of about $3.91 and a PE around 98.74. For 2024, Broadcom posted $51.57 billion of revenue and net income near $5.89 billion, reflecting a high multiple on earnings driven by strategic software and networking exposure. A significant portion of this massive cash flow is returned directly to shareholders in the form of a generous and consistently growing dividend. For investors looking for a combination of capital appreciation and a reliable income stream, Broadcom is a top-tier choice. The company has a stellar track record of dividend growth, demonstrating management's confidence in the long-term sustainability of its cash flow and its commitment to rewarding its investors. This dividend provides a tangible return on your investment while you wait for the stock's growth story to play out, offering a degree of downside protection. From a valuation perspective, Broadcom often trades at a more reasonable multiple compared to some of the high-flying names in the AI space. This is partly because its growth is seen as more steady and predictable, rather than explosive. However, I believe the market may be underestimating the long-term tailwinds from AI networking and the synergies from the VMware acquisition. As data centers are re-architected to handle the massive workloads of AI, the demand for Broadcom's high-speed networking and custom silicon is set to accelerate significantly, potentially leading to a re-rating of the stock to a higher multiple. Looking forward to December 2025, Broadcom is perfectly positioned to benefit from several powerful long-term trends. The continued growth of cloud computing, the rollout of 5G and Wi-Fi 7, and the massive build-out of AI infrastructure. They are a critical supplier to nearly every major technology company and have a diversified, high-margin business model that is built to last. Their combination of hardware leadership, a growing software business, financial discipline, and a strong commitment to shareholder returns makes Broadcom a compelling and somewhat under-the-radar growth stock that deserves a place in your portfolio. Advanced Micro Devices, ticker AMD, once the underdog, has staged an incredible comeback. Through relentless innovation and sharp focus under CEO Dr. Lisa Su, AMD transformed into a high-performance computing powerhouse. By doubling down on CPUs and GPUs, they clawed back market share in PCs, servers, and gaming consoles. Now, AMD powers everything from PlayStation to data centers, riding trends like AI and cloud computing. The growth story is far from over. Ignoring AMD now would be like ignoring the internet in the late 90s. AMD's biggest growth driver is the data center market. Once dominated by a single player, AMD broke through with EPYC processors, offering unmatched performance and value. Now, cloud giants like Microsoft Azure, Google Cloud, and AWS are buying AMD chips by the truckload. With the rise of AI, AMD's MI300 accelerators are set to capture even more of this booming market. The data center was just the beginning. AI is the next frontier AMD aims to conquer. Advanced Micro Devices is a major growth chip name with a market cap close to $357.77 billion, earnings per share of roughly $1.91, and a PE of about 115.06. In 2024, AMD generated $25.78 billion in revenue, and turned that into roughly $1.64 billion of net income, showing strong top-line expansion with profitability that's still catching up to investor expectations. While AI and data centers are huge for AMD, their real edge began in the consumer market. Ryzen processors revitalized PCs, winning over gamers and enthusiasts. AMD powers both PlayStation 5 and Xbox Series X, locking in a massive, stable revenue stream. Their close work with game developers and innovations like Fidelity FX Super Resolution keep them ahead. With strong positions in PCs, consoles, and data centers, AMD's diversified approach makes it a compelling long-term investment. Meta Platforms, formerly Facebook, ticker META, is the undisputed king of social media. With Facebook, Instagram, WhatsApp, and Messenger, Meta connects over 3.5 billion people daily. This massive user base creates a powerful moat and a cash-printing digital advertising machine. Even through controversy and change, Meta's core business remains a juggernaut, driving huge profits and growth. As we look ahead, Meta is leaner, more focused, and poised for continued dominance. The metaverse is Meta's bold, multi-billion-dollar bet. Zuckerberg's vision for a new, immersive internet where we interact as digital avatars. It's a massive gamble, with Reality Labs pouring billions into hardware and software, hoping to own the next computing platform. Meta Platforms remains one of the most profitable ad and AI platforms, carrying a market value near $1.61 trillion, EPS of about $22.61, and a PE around 28.34. Last year, Meta reported $164.5 billion in revenue, and converted that into $62.36 billion of net income, a margin profile that underscores the cash-generating power of its social and advertising franchises, plus rising AI monetization. If it works, Meta could control the future like never before. For investors, it's a high-risk, high-reward play, potentially extraordinary, but with the core business still strong if it fails. While the metaverse grabs headlines, Meta's real revolution is AI, supercharging its core business. AI curates your feeds, drives engagement, and powers Meta's ad machine. The smarter the AI, the more time you spend, and the more ads you see. This direct link between AI and revenue is transforming Meta's future. With AI, a cash-gushing core, and bold bets on the metaverse, Meta's growth story is just beginning. Amazon, ticker symbol AMZN, is the ultimate e-commerce powerhouse. From coffee makers to drones, Amazon delivers almost anything to your door in days. But it's more than an online store. Its logistics network is a modern marvel, creating a moat competitors can't cross. With innovations like Prime, Amazon Go, and Whole Foods, Amazon is reshaping global commerce. For investors, this relentless growth and innovation make Amazon a true behemoth. Amazon Web Services, or AWS, is the hidden powerhouse behind Amazon, fueling its profits and innovation. As the global leader in cloud computing, AWS provides the digital backbone for companies like Netflix and even government agencies. Its high-margin, recurring revenue drives Amazon's growth, making AWS the secret sauce and primary engine for Amazon's future success. Amazon is the sprawling commerce and cloud behemoth with a market capitalization of approximately $2.5 trillion, trailing earnings per share of about $7.09, and a PE near 32.89. In 2024, Amazon recorded $637.95 billion of revenue and net income of about $59.24 billion, a reminder that unmatched scale across retail, cloud, and advertising still produces enormous absolute profits. Amazon isn't just an e-commerce and cloud giant, it's a multifaceted tech powerhouse. From advertising and entertainment to healthcare and smart home tech, Amazon's relentless diversification fuels growth and resilience. Each new venture strengthens the ecosystem, creating a powerful flywheel effect. With day-one culture and long-term vision, Amazon continues to innovate, making it a compelling choice for any well-diversified portfolio. Alphabet, ticker symbol GOOG, is the king of the internet. When you think of Alphabet, you think of Google, and for good reason. Google's search and YouTube platforms dominate digital advertising, connecting billions of users and millions of businesses every day. This advertising juggernaut is a pillar of the digital economy, generating immense cash flow and funding Alphabet's ambitious projects. For investors, Alphabet's ad business is the gold standard. While advertising is the engine, the true long-term strength of Alphabet lies in its vast and interconnected ecosystem of products and services. This goes far beyond just search and YouTube. Think about the Android operating system, which powers the majority of the world's smartphones. This gives Alphabet a direct line to billions of users, providing a platform for its services and a massive distribution channel for the Google Play Store. It's a strategic masterpiece that ensures Google's services are front and center on the devices people use every single day. It's a level of integration that is incredibly powerful and, honestly, really hard to replicate. Then you have the suite of Google Workspace applications, Gmail, Drive, Docs, Sheets, which are essential productivity tools for hundreds of millions of individuals and businesses. This creates a sticky environment where users are deeply embedded in the Google ecosystem, making it less likely they'll switch to competing services. Add to that Google Maps, the default navigation tool for most of the world, and Google Chrome, the most popular web browser on the planet. Each of these products, dominant in its own right, works together to reinforce the value of the entire ecosystem, creating a flywheel effect that strengthens Alphabet's overall market position. This ecosystem isn't just about user stickiness, it's also a powerful driver of future growth. Each product collects valuable data that helps Alphabet refine its services, improve its AI models, and create more personalized and useful experiences for users. For example, data from Google Maps can help improve local search results, while data from Android usage can help optimize the performance of apps. This continuous feedback loop allows Alphabet to innovate faster and stay ahead of the competition. It also provides multiple touchpoints for monetization, whether through advertising, App Store commissions, or enterprise subscriptions for Google Workspace. Alphabet sits near the top of the megacap roster with a market value of roughly $3.8 trillion, EPS of about $10.12, and a PE around 31.14. For 2024, Google parent Alphabet delivered $350 billion in revenue and net income of about $100.11 billion, a testament to the company's dominant cash engines in search, advertising, cloud, and expanding AI services. For an investor looking at Alphabet in December 2025, this ecosystem is a critical part of the thesis. It demonstrates that Alphabet is not a one-trick pony reliant solely on search advertising. It's a diversified technology powerhouse with multiple billion user platforms, each with its own significant moat. This diversification provides resilience and creates numerous avenues for future growth. The way these products and services seamlessly integrate and reinforce one another is a testament to the company's long-term strategic vision, making it one of the most formidable and durable companies in the world. The third and perhaps most exciting reason to be bullish on Alphabet is its portfolio of other bets. This is where the massive cash flow from the core advertising business gets put to work, funding futuristic, high-risk, high-reward projects that have the potential to become the next massive growth engines for the company. This segment is Alphabet's internal venture capital fund, and it's working on some of the most cutting-edge technology in the world. We're talking about companies like Waymo, which is a leader in autonomous driving technology, and is already operating commercial robotaxi services in several cities. The potential of Waymo alone is enormous. The market for transportation is measured in the trillions of dollars. And if Waymo can successfully commercialize its self-driving technology at scale, it could completely revolutionize how we move people and goods. This isn't just a dream, it's a tangible business that is making real progress. And that's just one of the bets. Alphabet is also investing heavily in life sciences and healthcare through companies like 𝗟𝗟𝗨𝗦, which is developing tools to collect and analyze health data, and Calico, which is researching the biology of aging. These are moonshot projects that could have a profound impact on society and generate immense value if they succeed. But the most important bet of all is Alphabet's deep and long-standing investment in artificial intelligence. Google has been an AI-first company for years, and its research division, DeepMind, is responsible for some of the biggest breakthroughs in the field. This expertise in AI isn't just a side project. It's being integrated into every single one of Alphabet's products, from making search more intelligent and YouTube recommendations more accurate, to powering the autonomous systems in Waymo's vehicles. In the age of AI, having a world-class research and development team is a critical competitive advantage, and Alphabet is arguably at the very top of the game. As an investor, this focus on the future is incredibly compelling. While the core business provides stability and profits today, the other bets and the leadership in AI provide a massive runway for growth tomorrow. You're investing in a company that is not only dominating the present, but is also actively building the future. This combination of a stable, cash-rich core business with the explosive upside potential of its futuristic ventures makes Alphabet a unique and powerful growth stock. It's a bet on continued innovation and the relentless pursuit of the next big thing, which is a fantastic position to be in for the long term. Here are 6 top growth stocks: NVIDIA, Broadcom, AMD, Meta, Amazon, and Alphabet, each with a strong moat and clear path for growth. Taken together, these companies span a spectrum from pure-play AI accelerators to diversified platform giants, each with distinct valuation multiples, profitability profiles, and growth levers that investors need to weigh depending on whether they're chasing scale, margin expansion, or secular AI upside. Remember, always do your own research and build a portfolio that fits your goals. Want to level up? Check out my Value Stocks Investing Master Course, link in the description. Which of these 6 stocks are you most bullish on for the next 5 years? Let me know in the comments. Don't forget to like, subscribe, and I'll see you in the next one.